Hello, ladies and gentlemen. Good day and welcome to the show. Today is December 18th, 2020. It's a Friday. Now, listen, guys, as far as stimulus is concerned, I was listening to them talk about it this morning, And, some states, I think it's California anyway, is going to have a budget surplus. I know, it's just unreal. In this kind of a situation, and other places like New York. New York City itself, is having a real estate problem that's manifesting itself, and they're going to have a hard time pulling their budget together. But the overall troubles in the system is there's an awful lot of people without work right now, millions, but they're not falling through the cracks. The social system, the social safety net so far has caught most of them enough where they're not on the street. But a lot of these things are going to expire at the end of this month and going into next year. And so what we're looking at is a situation that hasn't developed yet. And this situation will really push stimulus. But they're not being pushed just yet. And so what they're doing is they're what I call lollygagging. They're lollygagging. It's the old saying. Well, anyway, they're not getting it done right yet because they don't feel an extreme pressure to get it done. The pressure hasn't really come on them just yet, so we're probably not going to see any checks come for Christmas. But I think moving into the new year, as January starts to progress, we're going to see an outcry from the people who are going to be pushed out of their homes, people that are going to start to really run into trouble with obtaining food and food insecurity and so on. That's going to push them into action. So I think sometime in January, probably at the latest February, we're going to see massive stimulus coming. It's very possibly going to be bigger than the $900 billion that they're talking about now. I'm thinking they're probably going to go in for a bigger deal once the trouble hits. Once the trouble really starts to manifest itself. That's what I'm thinking. Well, that's just my own opinion, but that's what I'm thinking is going to happen. But the stimulus is never going to stop. Looking at Fed accommodationary policy, moving forward, in the short term and into the medium term and even into the long term, they're talking about 2024 before they're really going to start to normalize things, or any form of tightening. They're talking about 2024. So that's a long time away. And the markets out there, they've been buoyed on all this stimulus. Well, let's get in there and take a look at the markets. Let's open up the charts right here and take a look first at the silver price today. It's maintaining that gains that it made pretty good. It's down 20 cents, but it's at 25.79. But if you see the green line here, it is maintaining these gains that it did make, And that's a good thing for silver. But I'm going to tell you guys what. Silver, gold, and cryptos, most of the top cryptos, are severely underpriced right now, considering what's going on. Considering that we're into a printing regime that's just getting underway, a never-ending printing cycle. And this is leading to a dependency on all of the markets and all of the businesses out there. We got so many zombie businesses and stuff like that are totally dependent on what they're doing. The system would completely collapse if they pulled away all of this dependency. In other words, the system would do the same thing that a person that tries to come off of a substance has happened to them, and that when they go through a sudden shock of withdrawal. And in fact, some of these substances, the shock can kill a person. A person, it's just too much. It overwhelms the system. And that's the way with the system, the general system. If they pulled away suddenly from all these things, not just pain, it would just be a total stall. Everything would start to go bankrupt. So they can't. They're caught in a trap where they have to keep stimulating, and they're just going to keep on and on until the dollar's worth less and less and less. And at the same time that they're doing this, the system itself, the underlying financial system, is disintegrating. Sure, we'll have a few little bounce backs. And I think we're going to have one of those bounce backs, a little bit of a recovery moving into this year. But that's only going to make the velocity of money go all the faster. What we're headed, the end game in all of this, is something called hyperinflation. Next year, 2021, is going to be what is called the acceleration phase to a hyperinflation. And during the acceleration phase, what you see is inflation. Higher than normal inflation, and it gets hotter and hotter as it progresses into the year. Later and later, and you start to get used to it in the end. You get used to everything, the price rising on everything. You start to get actually used to it, acclimatized to it. Moving into 2022, 2022 is going to be the year for Bitcoin, cryptos, and all that. The sky is the limit to how high they can go, because we're going to be moving into the hyperinflation in 2022. And you're going to have to prepare for it, because at the conclusion of that, we're going to get probably partial shutdowns in the system. I say partial. I mean areas where the system will shut down. And if you're in one of those areas, you need to be prepped. Otherwise, you're gonna be in a disastrous situation. And that's at the conclusion of the hyperinflation. That's when they have to do the reset of everything. It's at the conclusion of the hyperinflation, when the dollar's basically toast. It's gone. It's went to zero. Then they have to reset everything. And, if they reset into some, or restructure into some sort of new money, in other words, if they try to exchange a dollar for a dollar, and the new dollar's not backed by anything, well, it'll fall to zero very quickly too, So that won't work. All of their tricks, nothing's going to work. There's only one way. They have to back it with something to give it value at that point. They have to back it with hard money. And it's probably going to be a combination. Let's take a look at this article here. It says, Goldman says, Bitcoin and gold, they can coexist. I totally agree. And I think that's what you're going to see happen in the end. Is the Bitcoin is going to be able to purchase gold. Well, it already can. Bitcoin will be able to purchase gold, and gold will be able to purchase Bitcoin. But dollars won't be able to purchase Bitcoin. Dollars won't be able to purchase gold. It's going to take real gold or real Bitcoin to purchase one or the other. So they're going to be basically interchangeable. So you want to move your gold, you're going to convert it into Bitcoin, then transfer the Bitcoin across the internet, and then the gold will be in the other place. But the gold's still going to be the foundation, I think. Ultimately, I think behind Bitcoin is going to be gold. And I don't think it's going to be a hard peg. But I think Bitcoin, in the end, will end up being priced in gold, not dollars, because dollars will be worthless. And gold, in turn, will be priced in Bitcoin. And the two, you know what it reminds me of? Chocolate and peanut butter, Reese's peanut butter cups. Two go good together. Gold is like the peanut butter, and the Bitcoin's like the chocolate, or whatever. They go good together. The two of them go good together. I don't understand why all these people out there are like, oh, I'm for gold, and the other one's, I'm for silver, and I'm for Bitcoin. And they can't get along. You should have all three. Why go without? When you go for dinner, and you're gonna have a dinner, you don't go without your dessert. Well, look at the dessert like Bitcoin, and your silver is like eating your broccoli, it's and then you got your steak, and your steak is your gold, you want all three to have a full dinner, full meal, and that's the way you should be. That's the way you should think. You should, in your portfolio allocation, you should think about all three of them, as all three are worth having. They're all great. Gold, silver, and Bitcoin. That's where you want to be. And yes, they can coexist. They are coexisting right now. Bitcoin and gold coexist at the same time and both be worth a fortune. That's what's going to happen. Well, we're going to take a look at the gold price. I don't think we did the gold price yet. Gold price today is $18.82. Let's move on quickly through and take a look at cryptocurrency as it's $641 billion industry. And we're looking at a Bitcoin price of $22,705. Now we're going to take a look at the Dow Jones Industrial Average, and it's down 177 points. The Dow Jones is starting to hyperinflate. Now, a hyperinflating stock market, and this often happens when you get a hyperinflation in a country, the stock market hyperinflates. But you have to understand, the stock market, even though it's going up, it's actually going down. Let me explain. What can you purchase with the dollars if you were to sell out your stocks and you were to purchase something with those stocks? What you can actually purchase with those stocks is actually going down because the purchasing power of the dollar is going down more than the stock market's going up, and even though the stock market's going up. And so basically what I'm trying to say is ultimately the dollar's on its way to zero, so it doesn't matter if the stock market goes to 100,000, 200,000. 0 times 0 is 0. And if your money goes worthless, then even though the stock markets went up, what you can purchase with that money that comes out of the stock market is less and less and less. So if that's where you want to be, the stock market might do pretty good over the next few years because we're in a hyperinflation. But you got to understand it's priced in dollars, not priced in gold. If the stock market was priced in gold, you guys would be making a fortune on the stock market because it's going to go up a lot. But it's priced in dollars. And like Ray Dalio says, cash is trash. And that they're going to make it into trash. Let's take a look now at crude oil, $49.05. Crude oil's on its way up again. You know, it went down to negative $40 below zero there a while ago. Unbelievable. Somebody had a tank, you know, they would pay you $40 for every barrel of oil you could dump in your tank back then, just for a short period of time. And I'm sure a few of them must have got awful rich from that. A few of them might have had empty tankers or whatever just sitting there, and they were able to buy that oil at negative $40 and dump it in their tank. Somebody got rich off of that. Move index today, 44.15 today, and so the move index is staying down, so we're not going to pay too much attention to that. Bonds and rates today, we're looking at bond yields rising and falling. It's kind of a mixed bag. And to finish off with the U.S. dollar index, 90.07. It's kind of a little bit going along sideways. It's keeping its head above 90, though, right now for the meantime. Probably dip down below into the 80s tonight, 89 or something like that. Thank you guys for listening to my show. Like and subscribe. Give me a thumbs up because those thumbs up mean a lot to my channel. You know, they help keep my channel running and everything. I really appreciate you guys putting those thumbs up. And we'll catch you guys in the next episode. Bye-bye.